We've all worked a soul-crushing 9-to-5 job when it felt impossible to advance. When you work a low-wage job, it's difficult, if not impossible, to accumulate real wealth. So, how do millionaires make money? Millionaires have 7 revenue sources that allow them to earn money all day and night. They do not exchange time for money. Instead, they are creators and business innovators. While each millionaire has a distinct collection of assets, they never put all of their eggs in one basket. While watching this video, note how many of these income streams you currently have and which ones you can create immediately. Number 7. Earned income from a paycheck. Earned income is one of the first and most well-known sources of income for millionaires. Earned income comes directly from your employment. Most individuals rely primarily on earned income for a living, which is a huge mistake. You're exchanging hours of your life for money. You work more hours when you need more money. The issue is that everyone has the same 24 hours a day, and you can only do so much work in that time. If you have a job but want to earn more money, you may either look for a role that pays more per hour or take on a second or third job. Working overnights or on weekends may be required. The issue is that you continue to exchange more of your time for money. Instead, it would be best if you aimed to trade your time for more money. Make $25 an hour instead of $13 an hour, and work the same or fewer hours as before. Number 6. Capital gains from selling appreciated assets. Capital gains are the funds received due to an increase in the value of an asset you sell. It is the difference between the asset's sale and initial acquisition prices. This includes equities, real estate, bonds, jewelry, coin collections, and automobiles. However, capital gains are not the same as investment income. Capital gains are earnings from selling an investment for more than you paid. Investment income includes capital gains, dividends, interest, and other earnings. The most frequent ways to generate money through capital gains are to acquire properties cheaply and then sell them for a profit, or to buy growth stock funds and sell them after their value has appreciated. Capital gains can also be offset by capital losses from other investments, creating a tax-saving strategy. Capital gains have tax implications, so consult your tax advisor before selling major assets. Having a diversified portfolio of assets that generate capital gains income is a common strategy among millionaires to increase their wealth. Number 5. Rental income. This income is generated by renting out properties such as houses, apartments, or commercial buildings. Rental income can provide a steady cash flow stream as long as tenants occupy the properties. The majority of millionaires own a large amount of real estate because it's such a powerful type of income stream. Land is a limited resource. Once it's gone, there won't be any more. The affluent are aware of this and invest in real estate in popular areas or up-and-coming communities, since such assets appreciate quicker. Also, rental properties can provide tax benefits such as deductions for mortgage interest, depreciation, and repairs. However, being a landlord also comes with responsibilities such as maintaining the property, dealing with tenants, and potential legal issues. Nevertheless, rental income can be a significant source of income for millionaires and a way to grow their wealth over time. A quick reminder, if you've enjoyed the video so far, consider subscribing, as we frequently upload informative and educational videos. Let's continue. Number 4. Dividend income from stocks owned. This form of income is created by investing in dividend-paying stocks or ETFs. Dividend income is a payment given by a firm to its shareholders from its earnings or reserves, generally every quarter. Dividend-paying stocks are popular among investors searching for a consistent source of income and a strategy to build wealth over time. Millionaires often invest in companies or funds with a track record of producing stable dividends, since they may offer a constant cash flow stream. Dividend income may also give tax advantages, since it is often taxed at a lower rate than other forms of income. However, dividends are not guaranteed, and corporations might lower or discontinue dividend payments, so it is critical to diversify and not just depend on dividend income. If you held 100 shares of dividend stock at the end of the year and each made $2 in dividend income, you'd have $200. The earnings grow significantly as the number of shares increases. Number 3. Royalties from selling rights to use something they've written or invented. Royalties are payments granted to someone for the continued use of their work, which might be a book, music, patent, or innovation. Selling rights, on the other hand, is offering a third party the right to reproduce and distribute their work for a certain length of time, often in return for a one-time payment or a percentage of sales. These two sources of income may be very beneficial for people in the creative industries, such as writers, singers, and inventors, since they can make money from their work long after it has been produced. Number 2. Interest from savings, CDs, bonds, or other lending activities. Interest income is the money you make from lending your money to someone else. You can earn interest from a bank, a loan to the government in the form of treasury bills, money market accounts, certificates of deposits, and various other sources. Earning money in the form of interest is similar to the fees charged by credit card companies or the interest you pay on your mortgage. You earn a modest proportion of the money you put in for others to borrow for a short period of time. Earning interest from your bank is risk-free since it is FDIC insured. If the bank makes a terrible investment and loses your money, the federal government insures it as long as it is under $250,000. Some banks offer high-yield savings accounts that currently pay up to 5% annual percentage yield. You can also earn interest if you sell a business and allow the buyer to pay you back in installments over time plus interest. When doing this, you won't have all the money from the company you sold immediately, but if you deem the buyer a low risk, you may decide the situation is ideal. For example, you can sell your business or a franchise and allow the buyer to take 5 years to pay the total amount to you. Every month, the buyer would pay you the fixed principal amount plus the percentage interest you settled on. The buyer is running the company during this time, but you could take the business back if they default on the loan. Of course, this would depend on your contract with the buyer. Number 1. Profits from businesses they own. Business profits are different than salaries. Salaries are the wages you receive for performing your job. It might be hourly or a set annual amount. Business profits are the funds left over after all other expenditures have been met. A business may generate profits via advertising, selling items, or delivering services. All money earned by a company is added to the company's profit total for the year. Some business owners reinvest this excess cash into the business, but they can also take it as a bonus. Often, company owners will only take a lump sum business profit after taxes. This is your hard-earned cash for running a successful business. Because company profits are unpredictable, rather than increasing one's salary and harming the firm, retaining the same income and giving oneself a bonus of excess profit is a more prudent approach. How many income streams do you have? Compare the 7 revenue sources of Millionaires to the number of income streams you now have. Most people only have 1 or 2, the most frequent being a job and a rental property. The advantage of having many income streams is that you are more recession-proof. You are not bankrupt if you lose your job or a tenant fails to pay rent. Financial setbacks are less likely to impede your progress. This can provide a great deal of peace of mind. You may ensure your family's financial stability by using your time today to establish extra revenue streams. Wealthy individuals recognize that sacrificing your time for money only yields so much money. If you want to grow money, focus on passive income streams. Please let me know what revenue sources you presently have or would like to add. If you enjoyed watching this video, please like and share the video with anyone else you think could benefit from this content. Don't forget to hit that red subscribe button so you don't miss any of our upcoming exciting topics.